All right, welcome traders. Another coaching session here with the Bookmap Academy. We were away, or I was away for a couple of weeks there, so no academy meeting. This is the first one in a few weeks, and good to be back and back in the saddle here. If you're new in here, what this is all about is it's free. It's open to everybody. You can come on over. You can sign up. Let me show you where. Here, you just go to bookmap.com, click on the More button under Community, Bookmap Academy right here. You can read through this. It's a whole program. We've got steps in here. You can earn Bookmap for free. Also add-ons. You become a coach. You can get data. You become a Bookmap streamer for us as well. Sign up here. You don't even need Bookmap. Well, you need to have at least the free version, but no, there's no cost to it. You will need to register though at bookmap.com, and better to have Bookmap, at least the global version, because then you can get feedback from everybody else, including the coaches. Anyway, you can read through it for more information, and then a couple news items, and then we're going to jump in. We just launched another Bookmap Blue Jacket. You can earn $600 here. So basically, for you guys in the academy, this is a no-brainer. You're already marking up your charts. For those of you in the pilot program, you're already marking up your charts. You might as well enter this and see if you can win. Get a subscription, free subscription to over $600 value. All you have to do is take a screenshot of your marked up charts, and then on Instagram, X, and LinkedIn, just put hashtag free blue jacket and you're in. Go to bookmap.com/blue jacket and you can look at others and your own as well. You can use the QR code up here too. So anyway, good stuff there. And then we've got a new format here for you guys. And this is, we're going to try this out and see how it goes. With the hope that we can really hone this down into a little bit better process that will save us time. All right, so let me go through it here. It's pretty simple. It's pretty straightforward. All of you that are attending in here that marked up content, I would say first thing first is get your mic ready. Okay, we might call on you. We might call you up to the stage so you can explain your trades, etc. So make sure that you're prepared. Have a headset or however it is that you connect. Please, this will save already probably like 5-10 minutes right there. And then this is the process. We're going to try this out here. The coaches are assigned some of your work, and they are going to review it. Okay, we're not going to ask you to explain it first. They're going to review it first. Then they're going to call on you to get your response. Okay, traders are respond to the coach's feedback. And then it will be turned over to the other coaches if they have something to add. If the coaches have nothing to add, then we move on to the next person. You know, this will save, I think, a lot of time here. As we go through this process. Instead of being a 2-hour long webinar, we're hoping that we can get to maybe, I don't know, an hour or at least an hour and a half at the max. All right, let's try it out and we'll see how it goes. Our Bookmap Academy, I go through this in the All Markets webinar on Monday, Tuesdays, and Fridays at 10 a.m. It's the same process in the Academy, building out your playbook. Impetus, what's moving the market, you should know that. Key levels, you should have those marked up on your higher time frame charts. Then you start to develop strategies and scenarios around those key levels, and your factors here: previous high of day, time of day. Maybe you're a VWAP trader, maybe you're a volume profile trader. What are you looking at? Maybe it's moving averages. Just to outline the bigger picture, the bigger trend, whatever it is that you trade, the bigger range. Okay. And then it comes down to very specifically your setup. You select the proper setup for the opportunity and the day. You have a checklist. You know your setup. You grade it. you determine how much risk you want to put on. Then it just comes down to execution, and this is actually the simplest part, to be honest. It sounds like it's the most difficult, but if you know your setup and you see it all align in here, it's pretty straightforward. You already know your setup, so you just execute. Just press the button. You know your risk, and then you manage the trade based off of the order flow as well. All right, that's our process in here. You guys in the pilot program know this process very well. This is you studied setups, specific setups over and over and over again. For those of you who don't know, what this is about here is building out an edge. So it's kind of a subsector of the academy. It's very specific. It is about repetition, and it's a process. And this is the biggest gap I've seen with traders, is that they're trading without an edge. If you are doing that, you're just gambling. You shouldn't be trading unless you just want to gamble. So what we've created here is a structured process that's measurable and testable, and it's a very fast method as well. I've done this back testing for I don't know how long, how many times over, just measuring and then painfully recording them in Excel spreadsheets. This process is trading and watching it and trading it in replay mode over and over and over again. It's way better because you actually gain experience in the price action. Anyway, if you're interested in that, also you can sign up. There is no cost to this either, but you will need to have a Bookmap Global Plus subscription. Go to bookmap.com, click on the More button, and then under the Bookmap Academy link here is Bruce's pilot program. Click on that. You can read through it, and you can sign up right here. All right. Okay, let's go through the disclosures and let's jump in. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's jump in and let's see. We've got Coach John here, and let's get his spreadsheet up. And I believe you got a bunch of people in here, John. So let's turn it over, and I'll just let you take it away.
Okay. Are they here, Bruce?
Let's see. Laura is typically here. I don't see her. She might be over on YouTube. So let's move on. And that's too bad, Laura. He's got like 4 of your charts in here.
Toboho
and Toboho
and
Jimmy. And I think I saw Toboho in here. Oh.
Yeah, he's in there.
Okay, there he is. Yeah, and it's good to have you, Toboho, because I think we missed you a few times there, and then let's see if Jimmy pops in here too. So we got some good stuff here. All right, I'll let you take it away.
This is the trend line break and accumulation trade, the first one for Toboho.
Okay.
Yeah. Okay. All right. Okay. Really doing a super job with this. He's showing the passive accumulation for 3 levels. Nice trend line break. I think he's in a little late here. I think once you get that trend line break, and when you have liquidity just 5 handles away, you want to have a little space for your target. At least that's my preference. Where he got entered at 75.95, I mean, he has sellers right there at 96 and a half, 96 and 3/4. So I always like to have a run and start to the first challenge so you can move your stop up. So I think this is very good. His stop management is outstanding. I didn't understand his target, and we'll talk to him about that a little bit, why he put his target up there. My preference, my trade would have been at 92, the break of the trend line with some volume coming into the market with enough target time and space, 5 handles or so, to reach that area at 96 3/4. So, but all in all, the structure of the trade is intact. Just two questions behind my review, and that is the entry being where it is, in the face of that seller, the seller's there at 96 3/4, and then the reason for the target. To me, it was just for me, hard to justify why that's up there. Um, let's see. We go to the next one, or did you want to get? Do you have the next one there, Bruce?
Shoot, sorry, I was on mute there. Do you? It's up to you, John. If you want to
Since we're
continue
missing
on.
Laura, maybe we can bring him on here for this first one, and we can discuss it. The next chart down, I just wanted to show. Yeah, if you can just bring up that next chart, that's a snapshot of the video, and it's just showing how it parallels to his read, that he's seeing very clearly the buyer accumulation, those pockets of buyers coming into the market, and that really and then where the buyers accumulate the pockets there in the white boxes, right?
Right,
I
right,
just
yeah.
wanted to underscore that because he's able to identify that perfectly. But like I said, just a little late with the entry, I think. But we'll hear from him and let us talk to him. Let us talk to us about that. But he's got his level there. His level that he anticipates will hold, which is at 75.92, and then he has the pattern working off of that. Is he there, Toboho? Okay.
Oh,
Yes.
yes, yes, John.
Yes.
Thank you. I'm
Okay.
here.
So just two questions. Could you talk about your entry and then the target?
Okay. Thank you very much. Can you show the chart?
Yeah, one up, Bruce.
I'm sorry.
One up. Show his trade.
This one. Okay.
Yes, sir. Okay, perfect.
Okay. This came after right on the left. It's out of the screen. Remember, we waited for quite a long time
Mhm,
before there was that impulse move
mhm.
upwards. We're even laughing at Laura, where she was even shouting and posted the picture on the chat that please move already. So after that impulse move, I really took time to observe how then the order flow was settling and my setup emerging. So that key high level time frame, it's where that impulse move took place. I think this was the first time you came back, Bruce, to host the live stream. So when the order flow reached that trend line, I really wanted to observe first what's going to happen. And then there was that horizontal structure. It did not immediately move up. And I drew that small horizontal structure and I waited for a break outside that horizontal structure as a confirmation that indeed the buyers are in control, having passed that key level, and that's what informed my entry. My key level, I think this is set there in brackets, and I'm collecting statistical information about this. We discussed it at one of the mentoring sessions. I think specifically DNT was interested. Why do I have 30 ticks as my standing target and 15 ticks as my stop loss? So I've been experimenting with this, whether and now in forward testing, whether it is actually workable. I must agree with you, John, that of the trades I've taken thus far, even though there are quite few, it's proven to be a difficult target to reach. So I'm contemplating adjusting it downwards, but the main issue for me might be the stop loss target because I feel that one is well set. Uh, so I might have to go one to one in terms of risk reward to adjust that target low. I've not reached it since I went forward testing. I'm not sure whether it's the state of the market. The markets are very choppy at the moment. Yeah, so that would be my response. That's why I always flatten my trades, and I think it was after one of your recommendations in one of the comments you posted on Notion that in one of the trades I should have just flattened the trade. So that's what I did here.
Okay. How about the
Thank you.
target?
Yes, the target is set on 30 ticks.
Just the 30
And
ticks. Okay. Well, let me show you
yes,
this
yes,
then. Bruce, can we go down two charts? Unless you had something I wanted to cover something else real quick. Go down to 1, 2. Yeah, that one. See, you see where your target is, where I have my question mark to Boho.
yes,
Okay.
yes, yes.
This is the look. Now that liquidity didn't exist during your trade. I drew that in there because I wanted to illustrate to you the importance of having liquidity around your target and front running it. You see that?
Okay. Yes, yes, I see it.
So that's the look that I always like to see because it tells me that there's interest in engaging trade up there. Without that, like I said, you're putting your ATM, your automatic target in, but you don't have anything there that suggests that the market sees that area as interesting and wants to engage in price. Remember, large traders, they need to have liquidity in order to trade. And so that's a lots of times why those liquidity levels are out there. So it's really kind of a heads up of their intent. So I just wanted to show that to you. That's the thing that I'm always looking for because I want to trade to that liquidity with volume. Do you follow what I'm
Yes,
saying?
yes,
Okay.
yes,
All
yes,
right.
yes, I do.
Okay. All right. Um, okay. Um,
So do you suggest I stop using the brackets
I
to
don't
set
suggest
my
that you
target?
stop using them. The brackets are good. It's just that when you decide to take the trade, at least for me, I need to have a target, and that target is dependent upon the presence of liquidity.
Okay,
Does that make sense?
okay. Yes, yes, it does. And the liquidity I was looking at, it's at 7,600. There is that liquidity there. That's why when there was that stop run upwards, I then flattened the trade because it
Okay,
had
and I
passed
and I can
that.
see that, but
Yes.
that wasn't there when you took the trade, though,
Okay, yes, maybe it was not there. Yeah.
right? I mean, that came in afterwards. The liquidity, the sellers that were in the market were just a couple of points higher than where you got in, and that was
Yes,
my main
yes,
comment about what you're doing here. You're already hitting a wall there, um, and you
yes,
can expect a challenge there. Now the market did work its way through, but what I always like to have is some really not a whole lot of order sellers in the way of getting my target if I'm getting long. Do you, does that make you follow what I'm saying?
yes, 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 it
Okay.
does. Actually,
Okay.
the comment you're making now, John, I've always, if you look at my journal entry, that's what I've taken as my strategy. At one point, you called it a trade, and I took it to heart.
Hmm?
And I always look at the magnetic liquidity as my target. For most of the times, it does align, but I admit in this case that there was no magnetic liquidity at my target. Yes, I
Okay.
take it that.
Okay.
Yes,
Bruce, can we scroll
thank you
down to
very
his
much.
next trade? Because I'm going to make a similar point here to follow up with what we just talked about. I want to go down to that one. Yes, there you go. Okay, so this is another trade that you did, Toboho, the trend line break and
Yes.
accumulation. Everything is in place that we'd like to have. And here you have the liquidity working above. Now
Yes.
you can justify, you can make a case for getting long because there are sellers up here that want to engage in trade. You see the difference?
Oh,
In
yes,
the
yes, I see the
in the
difference.
trade
Yes.
before, nobody was up there. Here, they're showing intent above where you're getting long. Um, Again, I think you could have gotten in here with some volume, just a couple of ticks earlier, a couple of handles earlier, and that would have given you some profit before you get up to that challenge. And in fact, you did exit there, but once you see that volume come into the market and everything else has been satisfied, and you see that liquidity there at 81 and a quarter, they canceled that, which means that they're
Yes.
kind of getting out of the way here. And that's your green light. You see that?
Oh, thank you very much for confirming that. It was just my hunch.
Okay.
Yeah, it was just my
Okay.
hunch that
Yeah,
that
that
means they're
liquidity
getting
was
out of the
there,
way.
and then
So,
they canceled,
yes,
um,
yes.
and they're essentially getting out of the way, is my
Oh,
read.
yeah.
Okay.
Thank you so much for confirming.
Okay.
I'm super excited with that.
Okay. All right. So, um, those are the trades that I had for Toboho. I'll move it over to the coaches, Bruce.
Okay. Guys, with the new format, any comments? I'm just going to open it up, and if someone has a comment, then say something. So DNT or Trading is Life.
Hey everybody, welcome back. How you doing, Toboho?
I'm doing great, DNT. I hope
No,
you
this
are
is
too.
Trading is Life.
Oh, trading is life. Oh, sorry.
It's
Sorry,
all right.
trading is life.
I wanna, give you an applause. I see you putting a lot of work in the pilot program. You posting and your stop management is great. I see you taking what I've been saying, Bruce and everybody else, and you're managing your trade, your stop loss, very well. Um, could we go to that first one, Bruce? The one John was talking about, the first one. He is illiterate. No, not
No,
that
not
one.
this one. Hold on. This is Laura.
Laura's.
Sorry.
Yeah, no worries.
This one?
Yes, that. Yes. So, I have to agree with John on this trade. I think you entered the trade late. Reason why I said that, you know, you see, you had all your elements there. Your trend line broke. Then it went into a structure. Then it broke that. That's when you should have entered the trade. You entered the trade right where a block of liquidity is, as you can see. I mentioned this before. You don't know if that liquidity is gonna get absorbed. If buyers are gonna go through that. So that trade could have easily went against you. Um, the entry for that trade would have been that big green dot, the green bubble showing that it is pushing through the liquidity. That would have been your entry for that, because you end up getting into the trade. As soon as you got into the trade, you started going sideways. So that means you had to sit through that for a little bit before it started pushing up again.
Yes.
You understand what I'm
Yeah.
saying, Toboho?
Yes, yes, that's exactly what happened. Yeah.
Yeah. So
I see that.
broke your trend line. It started consolidated. Once you see it wasn't going back, that means buyers was holding it above your trend line. Once it broke that, I don't know who did that little yellow triangle. Was that you, John?
The
John?
one at the entry
This is
or at the
entry.
break
This
of
is entry here.
That
You mean rectangle?
Yeah, the little rectangle right there.
Okay.
yeah,
oh, that's
Once
me
it,
who drew that. Yeah.
yeah,
yeah,
that's a
you drew
structure.
that.
Yeah.
Yes.
Yeah, once it broke that, that's when you should have got in the trade.
Okay.
That's telling you that little structure was broken. Exactly, Bruce, right there. That was your entry right there. And your
Oh,
target
okay.
should have been that liquidity right above. I
Right.
use bracket order as exactly. That's your entry and that's your exit right there.
Mm-hmm.
And then you could have just
Okay.
followed it up. And once it broke that, you could have trailed. You could have trailed it like you did. But I use bracket order as well. But just to like John said, I use my bracket order. It has to have liquidity towards my bracket order.
Yeah.
If the liquidity is above, I adjust it. If it's below my bracket order, I adjust it. Then I see if the risk is worth the risk. But I do use a bracket order as well. But I make sure there's liquidity there before I even place the trade, like John said. But other than that, I thought it was a great trade. Your risk management was perfect, and the other trades was as well. So that's my only comment. I think that the entry was a little too late,
Mm-hmm.
and you kind of got lucky on that one because it could have went against you.
Mm-hmm.
All right, Bruce.
Okay.
Okay.
Thank you very much. Trading is life.
Any other comments from coaches? Okay.
Not really. Looks good. Good job.
Okay. I just had a couple comments that'll be pretty quick. Toboho, like I really applaud what you're doing. It's inspiring, really, because you have really been disciplined about following this process. You've really dug deep into it. You trusted it. You have done your homework, and then this is forward testing here, and you took the trade. Almost okay. I mean, there's always things to work on. For just about all of us, for any trade, you can't. It's really difficult to trade perfectly, and yet you're seeing it. You know how to react, and it's because of your training and following that process. And this is live market, and you're doing it, and you're making money, or you're having wins here. You're building confidence, and you'll be making the leap into the next one in the live trading with just minis or micros or whatever is comfortable with you, and you'll have confidence and you'll have an edge, and that is exactly what the program's about. So way to go.
Thank you so much, Bruce. Highly appreciated. And thank you to John, Trading is Life, and DNT.
Yeah.
Highly appreciated, Bruce. Thank you so much.
Yeah.
Yeah.
You've done it. You've earned it. It's yours.
Yes. Yep.
Yeah, just to
Thank
piggyback
you.
what Bruce said, there's no such thing as perfect trading, or else we all be billionaires. But you have learned the concept. You doing this forward trading. That's when emotion really gets in it. It's not like the replay where you know what's coming. Now you don't know what's coming, and your eyes was trained to see it, and your eyes was able to capture it perfectly, and you risk tolerance management was done perfectly. It's just about training the eyes to see other stuff. I'm still learning as well, so I think you're doing a phenomenal job. You should be very proud of yourself.
Mm-hmm.
Thank you so much. And I must say, as my parting shot, that's probably the reason for my late entry at the still building confidence, since I'm now in forward testing, and I really waited for further confirmation, but I get it now that it became a late entry.
Yes.
Because I think it was a confidence issue, Bruce, if I can be honest and open.
Mm-hmm. Mm-hmm.
Yeah.
Yes, it was a confidence issue. Yeah.
Well, I mean, you'll overcome that. I mean, like you'll start to just more and more, and like this is exactly what we're here for. This is exactly what we're here for. Is like just kind of poke at it a little bit and go, hey, like you're a little late, and now you have something to work on,
Mm-hmm.
and
Yep, I
take
bet.
take back.
I bet you that won't happen again. You'll see that. You'll be like, oh, this is what they're talking about. And you'll be right over it.
Mhm.
Yes, thank you so much.
Yes, sir.
If I could add one more comment, just with the forward testing, and you were mentioning the 30 tick thing. Yeah, that's like what forward testing is for. If something's not matching up the way it was when you were doing replays, uh, that's what forward testing kind of shows you and exposes to you. It tells you, hey, this thing was working in replay, but this isn't the same thing, or it's not happening in forward testing. And Vinfra's doing the same thing, where he was testing some stuff in replay, and then he's doing his own forward testing, and he's adjusting to whatever the market is actually showing him compared to the results that he was getting before. And that's exactly like the process is you just see what was working before, now what's working now, and what's different, what's changed. And then you're saying you're not able to get the ticks that you were able to get before on that first on your initial scale, and that's normal. And then you just basically adjust from there. And everything else everybody else said was is important too. Um, and with one contract, it's difficult too. So you kind of want to stick to what you're used to. So if you're used to taking, especially with one contract, you got to stick to your rules of how you exit your trades. Because if you break those rules, it's really it's a lot easier to feel emotional about your exit. Whereas if you have your rules, you took your exit the proper way that you are normally supposed to take your exit, and there's not really you can't really get emotional about that. It's the way that you have trained yourself to take those exits. But if you exit out of fear, or if you exit or if you're trailing too tight, that there's an error that I consider those errors. So just keep that in mind when you're doing the forward testing. Just keep doing what you were doing in replay, and whatever you notice isn't really happening in the forward trading, just try to adjust it a little bit. Identify what it is, but try not to make an error doing it.
Thank you very much,
That's all.
TNT.
Okay. So we'll see if Jimmy comes in. If he does, then we can cover him. But what's that?
He's not in. I didn't realize
No,
that. Okay.
yeah. If he comes in, then let's get to the guys that are here.
Yep.
And the let's see. I've got Nan, and I'm gonna jump in here with Nan and a low volume pullback. And let's invite Nan up to the stage. And hold just a minute. Okay. All right, Nan, welcome. So my analysis on this, I mean, it's almost like the same analysis or same kind of feedback, Nan, that I would have given you like about a month ago. You are really seeing this well in the bigger picture. And I think that can be very confusing and challenging, but you're seeing clarity in this. And it's really phenomenal work. I don't really see a lot of traders doing this. I've like let me go. I'll just go and show you guys again. And it's for those of you who maybe don't know what I'm talking about. Go to bookmap.com, go to education, and then I put together these videos here in supply and demand setups. And it looks like to me like a lot of these resonated with Nan. They're higher time frame, like wedges, and they can be a little bit, they're just bigger picture, or it can be a little bit harder to understand. But I think what I see is Nan is identifying these big moves, right? Okay, here, consolidation. Here's your impulse move. He identified that big move. Look at all this chop in here, and this is actually, it's not that long a time, but it took a bit, and he's watching it, he's waiting, and then he's looking for these elements in here. And then once he sees what he needs to see, he's looking for the move. Okay, low volume pullback and then continuation. And this is more of a wedge type of pattern, but it still is low volume and low volume pullback. It's a higher time frame version of it, and well, medium time frame, I should say. Anyway, it's great stuff. You identify the elements in here. You've got the impulse move, break a structure, and then the impulse move on volume, and a good movement. And then you do notice the skew in here, or the offering down at a lower level in here. And then here is an really interesting one. This happens on these bigger moves or wider moves a lot of the time, and that is because you got to get this is kind of the absorption or the trap or whatever, getting people going the wrong way, and then getting them squeezed. And then I want to ask you about the time of day, because I'm not sure what time of day it is here, but or what time frame you are on. And then the entry in here, yeah, it's a little dicey for me, to be honest. I mean, it's right down at the bottom of the range, but you have your reasons, right? The volume's starting to pick up. Here's your divergence, and you're looking for that follow through in the impulse move. You get it, and you've gotten really good at trailing your stop now after some pretty good feedback, I think. We gave you, I don't know, some weeks ago, and took your profit down here right into high liquidity as well. Beautiful stuff. And yeah, hats off to you. So Nan, what do you think?
Yep. Hi, Bruce. Are you hearing me?
Yes.
Okay.
Yes.
All right. Thanks. Hi, Bruce. Traders and coaches. This was a write-up I did. I think I posted this yesterday. Or no, maybe early this morning, I think, because I wrote it up earlier in the week, and I wasn't quite sure if I should post this because it didn't fit the criterias and the guidelines textbook. And I didn't want to create any confusion with the pattern that the academy and the pilot program is promoting with something like this. So I really slept on this for a couple of days before I actually posted it, because I thought while it have some elements of the LVP, it also had some it's a variation pattern, as I would put it. But you saw the wedge, and I saw that subtle as well. But because I didn't find that the impulse was all that impulsive, and that's why I said on the very top, somewhat impulsive, because it's not really all that impulsive compared to other impulsive moves. And the same thing with the actual move, that exit area there was not all that impulsive, especially where I entered the trade. But the elements of the LVP, the absorption, the exhaustion, the skew, although that is elongated there, it had these features that helped to build the probability of the trade going in the direction I wanted it to go to. So while it may not be on one hand an LVP, breaking out of that structure there would have been truly entitled a breakout trade, as it did from the very top. So just continuation, breakout, continuation again. Bruce, right where I have the my entry, I have a structural line drawn there. It's very thin and you can't really see it. I can see it there. It's right above. Yeah, that's it right there. So that is something I commonly look for to see, once we're in this consolidation phase, which end of it are we going to break out, like most likely. And so I drew that there. as a supplemental break of structure. And once we came out of it, volume picked up. Um, I got into the entry at that point in time. So, and then the rest, was an easy play from that point on. The volume came in and I exited, after trailing it down to that point. Yeah. So in a nutshell, that's basically what this trade entails for me.
Okay. Yeah, thank you, Nan. Just a follow up here, and then I'll turn it over to the coaches. I struggled with this low volume pullback setup, documenting it. In fact, this one here almost looks very similar to what I just showed in here from the supply and demand, the low volume pullback video here, because it's a little bit higher time frame. And it wedged in here basically. If I go forward here, and so I think it's fine. It diverges a little bit from the replay files and stuff that I've been showing, but it's the concept here. It's the same thing, and I would say that this is impulse move. I don't see much buying in here at all. This is sellers moving it away from an area and exploring lower. And then it just it just went sideways for a while. I think these can be challenging because you get caught up in the chop. A lot of times you need a little bit more. You maybe need time of day. Maybe you need something more for this thing to start to move. A lot of trap traders, for example, and then look for that continuation at a specific time. So I think it does fit. It's just a different kind of version of it. But you got the low volume node in here, and then you got a beautiful another impulse move. And I don't think it's semi impulse move to me at all. This looks just picture perfect, basically. It is moving, and I don't see any buying in here until they start to cover down here into that high liquidity. And I know John will like to probably mention the target there on that. But yeah, way to go. The only thing, and I've seen you now do this multiple times, the only comment that I would have on a follow-up is, I know you said you have the line here in the structure. I take these trades too. It makes me leery because you'll get one more, maybe even above here, and then that fails. Stops everybody out, really annoying, and then you get the move, right? But I've seen you do this a bunch of times, so you know what you're looking for, and maybe you can articulate a little bit on that. Because you've taken these and you're hitting them, you're nailing them. It's not really coming back. It's just if it comes back, it's only to test this structure where it just broke down from, really. Like here it is here, right? That's your another micro low volume pullback before the move, and here's another one here. Anyway. So Nan, I don't know if you want to elaborate a little bit on that, on your entry, or maybe you said enough. I don't know.
Yeah. Well, I think I see a point, and I know the potential of the risk involved if we had an abrupt, move back up towards the top. What gives confidence for that entry there? And I could have been wrong with it, but I was quick to press my my flatten button. But the other factors like the absorption, the low volume pullback to that node, the absorption, the skew, those elements there helped to give me the I guess the gist of what I think will happen next. and especially when it came below that um, smaller, structure, horizontal structure break there. So that's really what I determined to take that entry there. In addition to the volume coming in at that point in time, all of those things combined help to make that decision. And yeah,
Beautiful, beautiful.
and it's Eastern Standard Time Zone. You
Oh, it
had
is.
asked earlier,
Okay.
right?
Okay. Great. Great. That's good to know, because time of day is you, I mean, you can see when does it really start to pick up? Right around 2 o'clock. You
Right.
know. Coaches, any comments?
Yes, concerning the entry. Um, Nan, you drew your circles around the trap buyers, time 1411, yeah, there. And you see the volume bars. I mean, that's one of the highest on the chart that occurred at 1411. So relatively speaking, that was a lot of buying that came into that market, and it failed. And then it failed again. And so for that reason, I think you could make a case for entering at the break of that structure, which would have been at time 1413. Exactly.
Okay. All right.
Right. And that gives you a little bit, it gives you a little bit of daylight before you reach that liquidity below.
Mhm.
I understand what you're doing. You're waiting for the break of structure, but when you have those kind of failures, um, the question I ask when I'm trading is that, well, where are they going to give up? Where are they going to bail out? And they're probably not going to wait to the bottom of that range. They're going to be looking to bail out pretty quick. Or at least I know I would. So that would be, I think, the thing to key on, and it actually improves the quality of this trade when you see failures like that, right at the low volume node. It could go either way, and they tried and they failed, and I think that's significant. You follow me?
Yeah, I do, and
Okay,
appreciate
Bruce.
you bringing that
Yeah,
point. Yeah.
Yeah,
yeah.
really great point. In fact, it's a lower high as well, and they can't
Right.
even reach this swing up here.
hmm
Um,
Mhm.
but yeah, really good point. That's a nuance, John, that is just golden.
Yeah, it is. It really adds a lot to that, because there's probably some sweeps in there. There's probably some buy stops that got executed, and then it reversed, and then you can put your stop right over top of that, right over top of that
Right.
failure. Yeah, and
Okay.
you're going to know pretty quick if you're right. So that really
Right.
adds, I think, a lot to this trade.
Yeah. Well, this trade actually open up, more eyes for me, and what you are introducing now will be something that I look for,
hmm
going forward from today, and sort of put it to the test, so to speak, and
hmm
see how the validity of it. And I'm sure you're right, because you obviously have an expert eye on this, and um, it's fulfilling the purpose of this meeting. So thank you, John.
Yes, sir.
All right.
Bruce.
Any other comments, coaches?
No, no comment. I mean, I thought it was an excellent trade. His stop management was spot on. I think he's doing a great job. So good job, man.
All right. Thanks. Thank you, Trading is Life.
Okay. All right. Well, then let's, if there's no other comments, let's move on. And, hold on a minute. Okay. That was non. And I've got another one, non. And I'll toss it over to you. Like, non, which one would you prefer to go through? This is a trend line break accumulation. Uh, would you like this one, or would you prefer this one here?
Go back to the other. Yeah. This one was a little bit challenging. Yeah, this one seems to be pretty straightforward, I would say. Either one is fine, but we'll take this one
Okay. Okay.
first. Yeah.
All right. So yeah, another. You've really you've just got a good feel for this. Again, understanding kind of the bigger picture here. Again, I know that what we've got here, what 15, 20 minutes for this to work out, but the patience, just waiting and waiting, and just letting it mature when it's ripe, and then you jump in. This is a beautiful trend line break accumulation. It's really kind of what I was after here with this setup, because instead of like the inverse, head and shoulders, like you want to see it really go low, really suck down into high liquidity, getting absorbed, seeing that passive accumulation, because Bookmap shows this passive accumulation really, really well. When you start to understand the passive accumulation, then you're going to start to understand all sorts of stuff. So we've got a trend down, but we've got buyers all the way down, passively accumulating. All we need is something to kind of kick it off and break the structure, and then see some of those buyers come in. And I mean, look at this. It's almost like, okay, you do get one pullback here, and then it just basically goes vertical. And you got your targets along the way. Even there might even be some more up here someplace. But anyway, this is really the reason why this didn't do something like this, because it's already just gone down, and then it's going to break, and it's going to be pretty violent, on the move back up, which is exactly what we're seeing here. So it's the challenge on this here, I find, is the fear of missing out. If you didn't get it in here, you've not seen enough of these, like it's gone deep into the level in below it, or whatever it is. I know you marked up your 6,600 down here, didn't get there. Anyway, you notice the big volume though, and you jumped on board. A right at the break of structure, jumped on board, took it up, the pullback didn't even come back because it's such a strong move here, and then on up, and then you trailed your stop, and then it looks like you hit the flatten button up here. So now this is again, pretty picture perfect. Also your exhaustion, that's why it looks like you kind of got out, and prior high, or and then the delta shift, and exhaustion. So you had your reasons for getting in, you had your reasons for getting out. Great trade, and I see you scored it as a 9 here as well. So good stuff. What do you think, Nan?
Yeah, I think you covered everything there that I initially would look for while sitting and waiting on this to develop. And the two key factors that I see that produces a good trade at the end or in the interim is straight, structure, trend line, and the passive accumulation. While the swings were wide in the development of it, it still remained intact as a straight line. And then there was so much significant passive accumulation that it sort of, lend itself to tell you what's going to happen next. And especially approaching the 6,600 level. You were right about the entry. I jumped in there, but it was not the fear of missing out, but it was just from the experience of seeing over time where at this transition phase, when the impulse is of this nature, it is eventually going to pull back. So I generally have a tendency to wait for a pullback before I, and confirm a smaller structure break before I, secured an entry. The transition was quick here, and because there was no delay in the transition, and instead there was an impulsive move. I felt confident that I can take the an entry at this point in time, and if and when the the pullback takes place, I will be ahead of that, which is what happened in this case here. While the pullback occurred, as you notice, it's a fine line I have there. I drew a sort of a low volume pullback kind of trend line to determine whether it's going to continue or not, in light of the first leg with all that momentum. So that sort of secured the next leg that is yet to come.
Yeah, great. Almost got stopped out there.
Yeah.
I know it's replay mode. If there's any kind of comment I would make, it would be on that. I don't think it's
Yep.
I don't think you're quite ready to move that yet. And what a pity if you got stopped out there, because of you identified all these things and just a little erratic swing here and there, and it knocks you out. But anyway, really, really nice stuff, Nan. I really like what you said as well, and your answer on that fear of missing out. No, it's not. It's based on experience. I want in. I know this is going to move. Fantastic. Coaches.
And that's where Bookmap does a great job with the volume bars, because you can see the volume coming in here. I think this is a perfect entry with the high volume, because you needed the high volume because you still had liquidity below the market working down to 6,600. But that really turned the tables with that volume coming in, with all those buyers coming in. And with that scenario, I wouldn't expect a pullback. This thing's going to go, and you were a part of it. But what makes this trade is the break of structure with that high volume, because like I said, you still had some liquidity down there that could have been filled. And so that was outstanding to see that. And that's what I love about Bookmap. You have both the volume dots and the volume bars to show you that change. And what a dramatic change that is. And you were on it. So very good. Yes, sir. Bruce.
Thanks, John.
Yep.
Coaches.
Yeah, I agree with John. I think your entry was spot on based on the last, if you look at the last green bubble, after the green dot, after it broke structure, then it went back down. And then look how it was coming back up. It's coming back up with volume and a big green dot. So you waited, as soon as you seen it pass, that's just based off experience. Because I would have got in right there as well. As soon as I saw it just coming in with that much volume, passing that little green dot, I know it's gonna, exactly. I know it's gonna continue. So I think you got in perfectly. You tried your stop perfectly. You know, you was a tick or two, or else you would have got. I would have been frustrated if you would have got stopped out right there. But I think you managed and you traded this trade perfectly. Great job.
Yeah. All right. Thank you, Benny, as always.
All right. Any other coaching comments?
Nope. Great job with the replay, man.
Yeah. Thanks, DNT.
Yeah, I try to do it every day, and but you're cranking them out. That's 102 right here. Keep it up. Looks good.
It's been a long road, or it seems like, but the experience is very thrilling. I can't express it enough. But thanks, Bruce, and your team.
Yeah. I mean, it's like it's just a pleasure to see you guys, you, Toboho, others, many others, embracing it, trusting it, doing the work, and seeing results. And this is more important than profit and loss. It's more important than anything. It's following the process and knowing that how to build a process, because you can now apply that to any trading method or style, right? So we're trying to keep it simple and stay on the process, guys. That's the key here. and focus on that. And the results will come because you're going to be nibbling away at it, doing better and better each time you take a trade, and you go through the process. You're building the experience, just like Nan said. Like, there's fear of missing out on some of these things. Nope, and not for Nan. He made this decision based off experience, and it makes a big difference. Way to go.
Yeah, it's funny that you said trading the system, because that's one of I have a total of like 15 questions that I ask myself, and I answer them every day. And one of those questions are, did I trade my system today, or did I trade my P&L? So if you trade your system, you always will win. P&L is the is the byproduct. The P&L is gonna come if you trade your system.
Indeed. Yeah.
All right, guys. Well, Nan, thank you. Really, really great work. Keep going, guys. And little takeaways, Nan. Even here, on that trailing stop. I think it's just this is working. This is way too aggressive in my book. This is going right, and you were anticipating a small pullback here, right? So let it do its thing. And look at that volume bar here, this huge spike. It doesn't even fit within your rectangle, right? It's up to here somewhere, all right? Great stuff.
Yeah, thanks, Bruce. I appreciate the you bringing me up once more. I appreciate it. Thank you.
All right, let's see. Jimmy is in. He is in the house. Jimmy, you're almost missed it. So good to see you here. We're going to John covered you, so we're going to invite you up to the stage. But Jimmy, like we said, we have a new kind of process in here. It seems to be going pretty well, guys. I don't know how you feel about it. But let's jump back here and take a look. Laura, Toboho, and Jimmy. All right. Jimmy. All right. So Jimmy, come on up to the stage and process here. John's going to review it. Then he's going to ask you what you think, and then it will be open to the coaches.
Good. Okay.
Hello.
Hey, Jimmy.
Yeah.
Okay. So this is a trend line break and accumulation trade. The first one, Bruce.
Yeah.
All right. Okay. Let's see. You have the break of your trend line after filling liquidity. You're getting long, I think, a little bit late here. You see the transition that I have marked here in my letter A. You see how it goes from seller volume to net buyer volume with the break of the trend line. I believe that's the sweet spot for the entry. You waited to clear that liquidity, which is fine, Jimmy. It's a more conservative route, and that's really okay, because where you got in, you had plenty of room for your target up here at 38. Not sure why you put your target at 27.50, because your liquidity is marking above at 38. So those are the two questions I had. A little late here, and again, once you see that change in buyer volume, and it's very similar to what we were talking about earlier. There's a lot of buyers coming in here. You can see them by the size of the volume dots and the bars, and so you can net coming in once you break the structure. Volume coming to the market on the bus, and then work your way up. But from there, if you could just the and selection for your target. And then the last thing I wanted to know is you had another target up way above, and I didn't understand the logic of that, because as I've outlined it here, there's 30 points of profit there with what I've sketched out here. With what you have, there's virtually 38 points of profit. So they're pretty sizable moves. Those three things: your entry, that first target, and then your reasoning for the target way above.
yeah. So me entry, I was trying to be careful not
Mhm.
to get caught in one of see where it just before 1600,
Mhm.
where you get a rally and then it fails.
Mhm.
So I sort of wanted to see buyers take it above that before I got in.
Mhm.
And then my first target was there so that I didn't have to move my stop loss. That would have covered the stop on
Okay.
on the trade. And that
Mhm.
was target because there was previous balance there.
Mhm.
I've marked like a micro balance
Mhm.
on the left side with the
Mhm.
high volume. Yeah, so
Okay.
prior
Very
to
cool.
that balance, there's that one there,
Mhm.
and that seemed a good first target to get risk neutral on the trade.
Mhm.
And
Um,
then the next target, I can't actually see it
right.
from this image.
Right. It's way up there. Yeah. And you're going to have to get through that liquidity at 37.50, 37.75. And
Yeah,
like I said, depending upon your horizon, if you're going for those bigger swing moves, that's fine. But I didn't see anything up there. I brought it up on my system on this day, and I just I didn't understand the rationale. But really, with the program that Bruce has put together here, um, one of the values is working just one contract at a time, because you don't
yeah,
get that relief off the first contract, and you really have to kind of manage. It's teaching you to feel that uncomfortable feeling that you haven't reached your target and you have to work it. And I think there's a great education behind keeping that as a priority, trading one unit at a time, and forcing you to continuously read the order flow of the market. Now, when you start trading in real time, that's different. It'll be easier then. But this training is actually intended to be a little difficult, and it's made a little difficult by just trading one unit at a time. Because, like I said, it'll really force you to feel the order flow and make your decisions accordingly. And you'll be able to feel when the order flow opens up for you, and you'll be able to use that in the future. So I would encourage you to just try to keep it at one single for your training. I think you'll realize the benefit of that, of
yeah.
doing that. I think
I
that's
understand.
what I. Yeah. Okay. I think that's all I had, Bruce. But very good work, Jimmy. I mean, outstanding. I think you're seeing it without question. You're seeing the trade, and just be mindful and watch for those change in transitions on the volume side on
Yeah.
using the
I've
using the
just got the
bars
image
there.
up as well on my computer. My target was so high up because there was on the COB there was
Okay.
there was a massive imbalance,
Okay.
and that seemed to be the day before's point of control. I thought we might get a migration back into that,
Okay. Okay.
but I understand it. It might be a bit too big of a target, like for the type of day it was.
Hmm. Hmm.
Yeah,
And that's fine, but you still have to work the order flow to it. So you would still have to manage your stops to get up that high. And it's hard to see that on this chart. But uh, anyway, very good. Yeah,
thank
Bruce.
you.
Coaches, any comments?
This is D&T here. What's up, Jimmy?
All right.
Hey. Yeah, it's just I think what John mentioned there about the one lot, I think that's a great point, John. I mentioned that to Toboho as well, and it really puts you on the spot with one lot. Very difficult, and that's exactly what I feel when I was doing these with one lot as well. And it really helps you create a consistency for entry, stop, putting your initial stop and your targeting, and then helps you really helps create a trade management for you as well. It's hard to see it in replay for the trade management piece because there's different regimes that take place, and you
Yeah,
can't really see that in replays unless you actually like go back with the charting platform and try to see what regime it is. But this really helps you create that consistency, and then you carry that consistency from replay over to forward testing, and then you see if that consistency carries over to your forward testing or not. And if it doesn't, then what has changed? What's different? That's kind of your goal, going from replay or in replay is doing that one lot, and then you go into forward testing, doing the same thing, seeing if you have any changes, and then you see where you can make some adjustments, and then then you go into live trading, and then like you said, it makes it a lot easier getting that risk off with multiple lots or micros.
thank you.
It's a
Okay.
beautiful trade though. Great chart.
I understand. Thanks.
Mhm.
Coaches, any other comments?
No comment. I just think Jimmy's doing a phenomenal job. He's been actively in the program posting, so I just wanted to commend him and tell him great job.
Thanks. Saving his life. Thank you.
Yeah, I just had a little bit to add to this, and it's everything else is, you guys covered. There's just something about the structure that I wanted to add, and that is, with Nan's previous structure, this one is different. Look at all the buy volume coming in here, right? So you're getting that accumulation on the way down. Okay, the angle of this is also a little bit harsher, but I don't see a whole lot of sellers in here, right? Still, it's trading into high liquidity. Jimmy, you waited for the structure. Like here, we have a high. Here we have a lot of buying, but they can't get higher, and we got this kind of a little bit of a wall there, of liquidity. We dip down into another area of very high liquidity, so you've got this behind you, you've got this behind you, and a lot of passive accumulation. And then I think John had a good. I think it's fine what you did here about you're not looking for it to come back and kind of bite you. You want that confirmation, but take a look at it and look at the structure when you see this kind of volume in here and you get it again. This thing's ready to go. In my book, you can probably look at that smaller horizontal structure in here, and you probably could have, and you got the trend line break too. So I would encourage you to take a look at those, and then you could have gotten in here, or even here maybe, or as John said on that break, and just confirm it with some volume, and there you go. And what I just want to show is that is so fundamentally different than Nan's. Oh God, if I have it here, I think I got it here. Yeah, look at this one in here. Okay, actually, there's a little bit of there's a pocket of buying here, but this is just selling off, okay, there's a little pocket in here as well, but it's a big difference between this and this, right? And that's a lot more buying. Okay,
Yeah,
and
I see it. Yeah.
that's the way that this trade worked. The concepts are the same though. Okay, wait for that structure break, and you got it, and look for that volume to come in. That's my only comment.
Thank you.
And also I just commend you as well. Like really, it's really great. You haven't been here long, and you're really doing well.
Yeah. Yep.
Thanks, everyone.
Yep. That's advanced stuff. Yep. Okay.
John, I don't know
So,
if you want to go over others.
well, this one I would like to go over.
Okay.
This is the next one that you have up on the screen. Do we have time?
Yeah.
Yeah. Okay. All right. So again, Jimmy's reading these charts very good, and the thing I like the most is that he recognizes the liquidity coming into the market very early before the trade actually happens. In fact, at that last pivot high at time 1522, you can see where the market's adding liquidity above 69.83 and up again at 69.92, 93. And he indicates that. That's his target from the onset. Exactly. So he's planning for it. As that market's coming down, he's recognizing that the market's interested in engaging in trade above. And I think that's key. So now he's waiting for it. He's waiting for the trend line to break, and very similar to before, as before. You know, he waited until he could clearly see a break to the upside, and that's fine. I think because of that added liquidity above and very little below, I would be a little bit more aggressive in here, buying with the large volume dots, with the idea of keeping the stop close. And because of this liquidity picture, if that failed, I would be looking to reload again and get long at 69.60. And that would be my style in doing this. But he waited for the more conservative entry, a little too close to the liquidity at 69.75 for my taste. Jimmy, did this go up, or how did this trade end?
It went exactly where the target was, but
Okay, excellent.
that was as
Okay.
much as it had in it.
Okay, but you still had to work through those sellers there between 69.75 and 77. So
Yeah,
again, as I've indicated with other charts, I always like to get some profit under my belt, especially working one contract, so that I can bring my stop up and manage it effectively. When you have that right in your face, it's kind of hard to do that. So that would be my only challenge to this to justify where you got long. But your stop management is fine, and again, you're seeing that liquidity, which I think is vital to order flow trading. And that's it, Bruce,
thank
for
you.
me. Yes, sir. Do you have any questions about what I said, Jimmy?
Yeah,
Perhaps
so
about my entry?
my entry, I think I waited for the low volume node because that was acting like resistance. And once we went back into it,
Yeah.
that was a sort of a signal that we were gonna go higher, and that should act like support now. And it did that, like.
Okay. Okay.
But that wall of selling, yeah, that looks like an obstacle, yeah.
Yeah. Yeah. Okay. All right. That makes sense. Okay. I understand. Bruce?
Coaches, any comments?
No.
Yeah, that Jimmy, you're saying that this was a low volume pullback entry, right? Pretty much.
Sort of. I got in before the pullback because if you see just before it goes through it was acting like resistance. And once it come back down to this wall of buyers and the breakout structure, that's where and it come back up above that it was saying, we're going through this low volume, and I had me stop below it, anticipating it'll act as support on a pullback.
Yeah, looks good. I like it for I like the low volume pullback entry there.
Thanks.
Okay. Yeah, I was going to comment on that too. Like DNT, that I like that, Jimmy. So you're really you're reading it well. You're understanding the flow and the change, and the bigger picture. and the targets, and then you're in this case here, like you know, you kind of missed maybe something in here, but you got out on the low volume pullback, and you know, it's kind of an odd one, you know, but your reasoning actually made pretty good sense to me, that this is the low volume node in here, right? But you see this volume picking up in here, and therefore you're looking for it to break away from it, and
Basically,
makes good sense. Anyway, yeah, it worked out pretty well. And you said it came back up into, well, probably for sure it came up into 82. I imagine it. Did it come up into this 92, 95, whatever it is up here?
I think it did. I'll try and find it now.
Yeah, nice.
Yeah, it did. So it came up to about 68.55, I think. But is this the same one? 16th of January.
Yeah.
Oh no, I'm looking at the year prior. Sorry, I'm not sure if it got all the way there. I'd have to dig through my pictures.
Okay.
You wanna wait a minute? I can have a look.
No worries, no worries.
No worries.
Anyway, that's my only comment. John, back to you.
No, that's it. That's all I had for this chart. Are we ready for the next one then? Okay. Let's see.
Yeah.
Uh,
No, that's that.
where-
That's that one.
what's that one?
That's it.
That's it.
Yeah.
Yeah.
Okay. I guess that we maybe skip this one. No, it's the same.
Yeah, maybe accidentally put two of the same
I think
posts.
there's a yeah. I think Notion replaced that. Unfortunately, let me see if I have it. Bruce, hang on a second. Shit.
I just wanted to add one thing just for Jimmy while he's looking, and Vinfra. You guys don't burn yourself out on these comments and reviewing or putting a whole bunch of comments on your replay trades, especially on replay trades. You just don't want you to burn out. I see you guys hustling, but that is that can burn you out. I just don't want you to burn out. I think Bruce had to tell me that a long time ago too.
It's a
I do have
really
one.
good comment.
Sorry,
Go ahead, Jimmy.
I've got one trade that I haven't posted yet. It's a replay file of the 2nd of this month. It was a morning breakout. I think might be like an IB continuation sort of setup, but it was in the first 15 minutes of the market open. And I need to post that as well and see what you think about that. It was like a trendline break accumulation, but it weren't. There wasn't like the usual three walls of passive accumulation. It was sort of the market opened, it tried to go down, it couldn't, and it went up, and I got in at the absorption on a small trend line break, and an aggressive accumulation.
Okay. Well, maybe we'll go over that next time, Jimmy.
I just put it into the Academy
Okay.
Discord.
Okay.
Yeah, my apologies. That didn't get pasted in.
Okay. Got it.
Okay.
Okay. Okay. Go. Okay.
Okay. And you're right. Okay. So for this one, I think I'm just going to ask Jimmy to explain it because I'm not following it. To be honest with you, Jimmy, I'll let you tell us the idea behind your decisions in here. I'm not seeing this trade, but go ahead.
So in this one. The same, it happened twice in the same day. I noticed the London session. There's a bit of passive accumulation. This was like a similar one to what I was talking about there. There's like a small trend line break accumulation at the overnight low, but the entry on the New York session was based on the area. It was value area high from the day before,
Okay.
and sellers were absorbed there. So I was thinking this is gonna mean revert back up to the initial balance high. I seen the volume point of control come down, and price didn't go down with it. That was another confluence, and I got long with the volume. If you look at 7490 as well, there's more sellers absorbed there. I entered on, I think I put another picture in the chat of the entry. It was zoomed in so you could see a bit clearer the reason why I got in. But it was a rotation. I was anticipating a rotation from yesterday's value.
Seeing that here. What I see is a
It
break
is
of
a
a
bit of
trend
a
line.
mess. That chart, I understand, yeah.
Okay.
Okay. Any other coaches? Any comments? Or were you finished, John? Or
Yeah.
Okay. And Jimmy?
Yeah.
Okay.
So that wouldn't fit into the trend line break accumulation setup. That's not that type of trade, no.
I'm just not seeing the levels of where we like to see the absorption.
Okay.
Because that sets up the trade. You have those absorption levels being accumulated, and then you have the break of the trend line. That's sort of the fuel that sets it. I mean, this thing takes off, but it's not from the pattern that we look for. And you've
I
seen
understand.
examples in this meeting where you could see the levels before the trade actually trends down to them. You can see that being filled. And I tell you, that's one of the things that I like the most about that trade. I use that trade all the time because I'm a counter trend trader. And the thing I like the most is that I can see the trade developing, the liquidity being absorbed. For like an example on a long trade, I can see those levels being absorbed on the way down, and that helps sets me up and gets me ready. And then the other elements fall in, and I'm just not seeing that here. That's my point.
Yeah, thanks for letting me know.
Yes, sir. Bruce.
Okay. Coaches?
Yeah, I agree with John on that. I don't see the accumulation. You just see heavy liquidity on both sides. So it could go either way.
Yeah.
You just got lucky on it, but that's the whole
Thank you.
point. Like the gas on them. So
Yeah.
I wouldn't have took a trade there.
Yeah.
Okay. Any other coaches?
I could put in one thing. Is this so this is a replay trade. Is that on the very left? Is that the RTH open?
No, that's pre RTH open for me is at 2:30 p.m.
Okay.
So it's around about there, yeah.
Yeah. So just the reason why I mentioned is because in replay mode you got to watch out with like your VWAPs and your VPOCs and everything like that, because when you start the replay, you have to make sure that the replay is resetting them on time as well, because like what you think is a VWAP or a VPOC or something like that in the replay trade, it might not actually be that depending on your settings in the replay mode, because especially if
Okay.
the replay mode is like started after the RTH open, and your VWAP is just going to start wherever that replay starts. So you kind of just have to double verify everything. And sometimes it's best, it's good to just to take it off, especially if you're trying to train your eye. I know what you're saying. Like you see this impulse up, and then you get this like pullback. And I see these trades where it's like where you need to and if it aligns with your plan, and that's the thing that's going to make the biggest difference is when you go into forward trading or live trading, if it fits with your plan, then that's when you try to find a way to get into the trade. And this is one of those pullbacks where it's like, okay, this is a pretty good pullback. I'm going to try to see if I can find a way into this using some type of setup. But sometimes if the setup isn't there, then it makes it difficult to get into it. So it's easy to justify trades is the problem. And you
Yeah.
really, when you go into forward trading, you really need to come in with a plan, because you'll see these things everywhere all the time. And so you need, like, having a setup is a good filter. It's a first start. It's a good start to you need the filter, your setup. But then the next filter is your plan. And that plan is the playbook. And that's what we're here talking about, is in the academy, is the playbook. And that filter is going to be your main filter on top of your setup filter. So yeah, it's just and yeah,
Thank you.
anyways, in replay mode, just be careful with those VWAPs and VPOCs and all that stuff.
I might take them off, to be honest, after there, and so
Yeah, in replay mode. And then live trading's a lot different. So our forward trading's a lot different too.
yeah.
Vinfra, actually, it's been a while since you've been here, Bruce, but since you've been gone, me and Vinfra were talking, and you probably remember, actually, Vinfra's been doing his replay trades by not looking at the market. He'll actually record the whole day, and he won't look at the chart, and he'll take his replay mode, or he'll take his replay, and then he'll trade it blind. So the replay trade that he does do, it's kind of like forward trading, because it's new data. He hasn't looked at it yet. So he's
Yeah,
doing like
I
a
didn't do
walk.
that one blind. So that one I had obviously watched throughout the day, and I sort of knew it was going to happen. That's what that one
Yeah,
was. So
almost all the time. Yeah, almost every replay is going to be uh in hindsight. Yeah,
I
I agree with
understand.
you. What
I'll
Vinfra's doing
practice
is
that.
very unique.
Yeah.
Mhm.
Okay. Well, I got a few comments for you, Jimmy. Like I said, I think you're doing phenomenally well, and you're new. It's kind of rare to see that. But on this one, though, I see kind of this is a step back, I think, for you.
Okay.
Uh, and
Thank you.
there's a number of reasons for it. You're looking at too much, and there's confusion in here from the coaches. And
Yeah.
I can kind of point to just some simple ideas. You've got the POC. You're looking at volume profile. You took the trade based off of some profile ideas. You've got VWAP. You've got all sorts of levels over here. None of these are a part of, you got CVD. None of these are a part of the
I've
pilot.
took the CVD off now. If that helps, I haven't been using that no more.
Okay. And none of these are a part of the program.
I
And
understand.
it I'm assuming that, or making the link here, that with all this other stuff in here, it might
Yeah.
be confusing your knowledge and your progress or your process, and that's what we want to avoid. So try to like get you back on the path, and looking at these
Thank you.
simple things over and over and over again, so you know exactly what they are, and you know how to react to them.
It makes sense. Thanks.
All right. Let's see. Anything else, John?
No. No, I think you covered it. Perhaps look at the video again that explains the trend line break and accumulation. Set your
I will.
chart up the same way, Jimmy, in your practice work, and I think you will be able to see what Bruce was just talking about. I think you'll see clarity with that. I think it would be a good investment of your time to at least try to try that. Okay.
No problem.
Yes, sir. But very good. You're doing great.
Okay. Guys, I think we've only got time for we've got Mobi's in here. And let's see, Moby covered Vinfra, PMAG, and Tomy. And from what I can recall from a few weeks ago, Tomy, we covered you pretty well, and then Vinfra, we covered you pretty well, but PMAG, I think it's been a while. Does that make sense, coaches?
Yeah.
And maybe we'll invite PMAG. I think he's in here still. Okay, excellent. So
PMAG's always here. Yeah.
PMAG, welcome, and bring you up to the stage, and let's go through your trades. Now, Moby's not here; he's the coach. But let's just we'll read through it, and we'll go through the trades, and then we'll get your take on it. Let's see here. Okay, so you've got your trendline break accumulation, and it's a little bit bigger. There we go. Okay. You identify them here, 1, 2, 3, 4, very clear. This is great. And you got your structural break. Okay. Key level, I know, well, you said it's support here. And you got tons of liquidity there, and it trades. Great. So we've got interesting little pocket. This, I'm always looking for this now, like, these little pockets of buyers, but they don't get traction. And then maybe exhaustion here, which you do kind of get, or maybe a little less than, on the move down. And then the buyers come back in, and they break the structure, like you noted, and take it higher here. I think I think it's good. It's replay mode. Go back and replay it again and again. I see you're getting in here with a buy stop, and you actually moved it up. You're looking for more confidence in here for this to work out, and looking for that volume. And yeah, I understand that, but what I see here is this is pretty good right in here. Well, this volume dot here, and it broke the structure down here. I don't see a whole lot yet, but you're leaning on this pocket here, and then boy, it would have been great to see the big dot here. You get it a little bit higher here. So I would be looking, or I would suggest that you go back and try getting in there, and replay it again, and then your trail stop here. Yeah, I would have waited actually on that one. I would have trailed it after this. I would have trailed it up to here, or something like that. Yeah, once it broke here, I would have trailed it up to here. You want to stay like a structure, 2 structures away. So because it's likely going to chop in one structure and knock a bunch of people out, but you're down here, and you're going to stay in it and let it work out, because you know that these work out, and let it work for you, and then target the right in front of the high liquidity. That looks good to me. The measured move or whatever, you nailed it. It's a little confusing in here. I think maybe consider right clicking on that heat map and filtering a little bit to kind of see the difference in the high liquidity here, because like I don't know what this did. I see them trailing up underneath here with a lot of liquidity, and we're still getting buyers in here. So maybe we came back up into the figure up here. I don't know, but you hit the flatten button right in front of that liquidity when you start to see that those sellers come in.
Yeah,
But
that's correct.
that's what I see. I'll open it to you.
Yeah, absolutely. Can you hear me?
Yes.
Yeah, first of all, Bruce, welcome back, because you got me hooked on this weekly meetings, and all of a sudden 2 weeks recess. I just had to look for something to do in those 2 hours every Thursday. So, yeah, I mean, basically, you're right. I think one of my challenges is, I mean, once I'm able to identify the where the trend line is broken, my concern is always if there's going to be a pullback. So I tried a little trick here, which I'm not sure it worked, but this is the swing low and VWAP plus one standard deviation, if you can see it there, to give me an indication where actually to some confidence basically, and to ensure, or not to ensure, to give me more confidence that I can enter there. I used that. I think here it maybe work, may work, may have worked, but not sure that that's a kind of a rule I can go by for future trades. But you're absolutely correct. I mean, the stop loss management, I probably need to improve on that.
Yeah, I mean, you got lots of support and help. You got, Trading His Life, who's like very passionate about that. It's kind of his pet peeve, which is fantastic. Yeah, I would stay away from adding this in your anchored VWAP. It's a whole different thing. And I know what you're trying to do, but just let it work. I mean, you don't need a line here to tell you this. This is just a line. I mean, are traders really reacting to those areas? And I don't know. So if I see massive volume in here on the buy side, then maybe, I know that the buyers, the bigger players came in and moved it at that point. But here, I don't know that. It's just a swing, and it happens to line up with a standard deviation line. And now you're adding things on the chart. And now it's not part of the elements you're looking for. And this is where confusion starts to arise, and it erodes your edge. It turns it into something else. Your data is going to be different. Your decision making is different. And the information that, or the data that you get into your trading journal, is now going to be different too. So I would be very careful about that.
Yeah, I understand. I mean, it's there. As I said, why not use it? But you're right. I mean, it doesn't belong here. I'd rather look at the heat map and the aggressive accumulation and several all those, uh, criteria that we have there on the list. You're absolutely correct.
Those are all my comments. So coaches.
Yeah, starting from the left part of the chart, Bruce, at 944 down to 950, it seems like after it pivots at 950, the environment changes. If you look at the price action on the way down, the liquidity forms in nice levels progressing downward. So starting from 944 exactly. And then once it makes a pivot to the upside, it gets real cloudy. And that's just not the environment that I like to trade in, because there's so many orders above and below the price that I don't have clarity like I did earlier. So it's not a setting on the chart. This environment has just changed, unlike on the way down. So while the mechanics of the trade are in place, the basic elements and conditions that we look for are very much in place, it's just that the nature of the market just changes, and not for the better. And the heat map tells you that. At least it tells me that. And I think I would wane off of that for that reason. Does that make sense, sir?
Yeah, that's what I want to ask you. If you think that one day I'll be able to read the heat map the way you read it, because you saw something here that I don't think I'll be able to even think about, and I appreciate that a lot. So
Okay.
this can give you something to think
You see
about
the
now.
difference though, just on this one chart on the way down, it's clear. Once it makes the pivot and starts to move up, not as clear, right?
Yeah. So what's the conclusion here? That it's what? That it's imbalanced, or I
Hands
mean,
off,
hands off?
hands off for me.
Mhm.
I mean, the
Mhm.
elements are there. I just don't want to fight all those orders that are just above where I'm
I
trying to
see.
trade up to.
I see.
I
Thank
just,
you very much for
you
that.
pick the
That's good.
battles that
Yeah.
you think you can win, and this just looks too hard to me. Unlike on the way down, something changed in this market at this time. Bruce,
Yeah, good point. I mean, I have a hard time reading it too, and that's why I kind of recommended filtering it if you can. This is like John is saying. I mean, this is very typical to see high liquidity on the way down, and then look over here, right? There's no liquidity or very little, maybe some in here. In a trending market, that's what it looks like. When you get your reversal in here, you'll start to see probably someplace around in this area in here. It looks like maybe even the guys started to come in here at that point, 7,600. And they start to kind of look for, after being filled in here, they're kind of saying, hey, come on up and fill me up here. But it's like a sea change in here. And
yes,
it's hard to read.
Yeah, about filtering down, Bruce. I mean, you're referring to the order size, or when you say filtering down, filtering the heat map?
Yeah.
What?
Just right click on the heat map
Mm-hmm.
and then play around with the upper and lower cutoffs.
Yeah. Okay. So what? I mean, what numbers to use there? Because usually there is 90 and 20, but I'm not sure what they mean. And I tried to help it to play with that, but I tell you, I didn't get it
Are, are,
the way I wanted.
are you able to come to the All Markets webinar tomorrow?
Well, I'll be in here, but I'm not sure. We'll see. But I can listen
Okay,
to
I
the
mean, I can demo it.
recording.
It's super simple. I can demo it for you, or and point you to it if you come to a webinar and ask, or I can just take a screenshot and send it to you
I
as well.
appreciate it.
So
Yeah, I will
yeah.
be flying tomorrow to Atlanta.
Okay, no
but
problem.
why would you want to change the settings when the settings are fine on the way down? I mean, this is
I
a change.
I don't know if they are for me. It's still kind of noisy for me. There's a lot of
There's definitely a change. Yeah, okay.
blue in here, and I don't know. But you're right. You got a good point. But like, I really want to look at this in here and say like, okay, like let's try to filter it down a bit.
Hmm.
And
Okay.
I'm seeing it. I want to see a little more distinction between high
Mhm.
liquidity and lower liquidity.
It's too much red in the eye.
Yeah, and if this is the case, like it still shows up as all this is super high in here, then
Yeah.
like it's confusing, and the market will likely just kind of chop, I
Yes.
imagine. And bounce around back and forth in here, especially this time of day if this is East Coast.
Mhm.
It's
I think it all started. I'm sorry. Go ahead.
it's perfect timing for East Coast. I know this is June 3rd, so we know what happened, right? It pulled back and then went down. So anyway,
Yeah, I think all started for me at least. I was looking for a way to ensure that what I see when it comes to passive accumulation, that I see thick liquidity, going into the aggressive buyers. That's the reason why I actually trade with that filter that you mentioned, and I think I just don't know what the right numbers are.
I wouldn't worry about the numbers really. I'll tell you, like it's just for each view is going to be different. The same market in different times of day might be different. Different environments, like or during a economic release, like we got a huge one tomorrow. So These are going to affect liquidity levels, and the numbers aren't going to work. You're going to have to just try to get a feel for it in relative terms.
Yeah. Thank you very much for that. I appreciate it.
Yeah, sure. Coaches.
Yeah, I'm with John on that one. And Jimmy, this is what we were talking about. This is a perfect example of it. Look to your left. You see how clear the liquidity is going down, and then on the right, look how busy it is. And PMAG, I paid a lot of tuition for this just because the elements are there. I don't want to go through the fight. Like John is like hands off. I think your setting is like mine's. This is how mine's are. It's just busy. It's just that buyers and sellers are fighting it out and buyers are winning. But I rather a clear path. I don't want to go through the grind because that's for me. It plays with my emotions. It makes my nerves go up.
Yep.
Then before you know it, if the trade goes against me, I'm gambling. So
Yep.
I rather keep my hands off.
Yeah, I understand.
That's the only comment I have.
Thank you. Thank you.
Okay.
I could throw in a comment.
Absolutely.
I was gonna say that looks like a pretty nice low volume pullback there. I probably would have took that if that was a key level that I was looking at. So it impulses up like at the number 3 there, goes up about 8 points. And it does this like slight pullback, and on that pullback you see sellers start to the left, Bruce,
Where
it pulls back right at 952.
Oh, here.
Right there. Yeah, and then if you entered and it's basically right at your entry. And I do this as if you didn't want to do the buy stop there, and you could just wait for the slight little pullback, and you see on that pullback sellers start to exhaust on that pullback, and it breaks higher. That could be like a small little low volume pullback there, and you could just put your stop under that. These things, like I I think Tommy just mentioned it in the chat just now when he was commenting to Jimmy, where trying to catch trendline reversals. It can be difficult, and it's hard to form an edge, on these because you're going against the grain here. And then Tommy was saying, if you wait for the continuation trade, let's say if you got this impulse out and you just waited, it's easy. You can miss these. You can enter early. You can take a stop. Like there's all kinds of things that you can do to try to catch these. But if you just wait for that continuation trade, like what Tommy was saying, I think it kind of does make it a little bit easier, and it does make it and it does kind of give you a little bit of defined risk here. You can trail under that where that swing low is at, and then if it works, it works, and if it doesn't, then it doesn't work. Just try not to get emotionally triggered by it, because when these things fail, they usually fail, and what that is it's telling you something. The market is actually speaking to you when those types of trades fail, and when you just keep slamming it and entering against it because you're emotionally triggered, then you're not listening to the market at that point. You're kind of just trading on emotions. I'm not really talking to you per se, but I'm talking to like Jimmy and Tommy, since he kind of mentioned it earlier. And
Well, I appreciate that, but you can talk to me because I think I made the same mistake. So
we all do, yeah. If we're honest, right? And that's all I wanted to throw in there, was that kind of looks like a nice little low volume pullback there to me.
Thank you.
And that's pretty much it. I just wanted to say that Tommy did post a good comment there. He was saying that a lot of this, when you're going into like forward trading and when you're going into the live markets, a lot of it, in my opinion, is having a plan coming into the market and sticking to that plan, and not getting over emotional about the plan if it doesn't go with the plan, because you have to understand that, like, when you post your plan, or you're trying to stick to a plan. And I made this mistake today where I'm trying to short the market, but the market is going against me, and you can't keep forcing your bias on the market. So just wanted to mention this because I think everybody is starting to, or you and a few other people are starting to go into forward trading, and I've been encouraging everybody to post their playbooks, post their plans in the academy, and yeah, just post them in the academy, and then it gives you something to kind of look at and go by throughout the day, and to tell you, hey, did I follow my process? Did I follow my plans today? What did I do wrong? How can I come in tomorrow and correct what I did do wrong?
Yeah, absolutely. And that's an opportunity for me, or at least, to thank you for this line in the sand, the daily, uh, daily market view or preparation that you posted. And it's very informative for me, and I learned a lot from that. Appreciate it.
Yeah, I mean, there's so many ways that people trade. There's so many ways you could come into the market. John's a counter trend trader, you said, and he trades off options levels. I mean, there's a million ways you can do it. So, like, um, if you could take ideas from people. I post my plan every day, and the key line in the sand thing I got from another professional trader, and it helped me a lot. And I only shared it because I wish I had learned it years ago. So, I mean.
Yeah, it's not just that. You get good ideas for free. I mean,
Yeah,
you cannot
exactly.
go better than that.
Yeah.
I appreciate that, really.
Just one final comment I have here, like, and then if any other coaches want to follow up, and we'll wrap it up here. But like, just try this PMAG. Like, I see, here you're moving your stop, then you move it down, you move it back up, and you move it back up, back up. It looks like, I'm not sure if you moved it back down or not, but when this kind of activity happens in here, it means either you made a mistake or you are not confident with this process. So I would suggest, what we're talking about in here, we've had a lot of different kind of back and forth about, different things here. This is a good one here. It's pretty simple, it's pretty straightforward. Just work on the process for your stop management, your trailing stop management, and follow the rules on that. If you can do that and get really good at that, then the other things will start to fall in place. Like, you won't put on the anchored VWAP. You won't need it. You won't have a VWAP up here. You'll, so start with something that you can work on your confidence right here.
Yeah, I think now you pointed out, it looks like that I played like tug of war, with the price section. So absolutely, I understand now.
Yeah, and that might be like a good one because it's simple. Learn it, and then apply that to other elements.
Yes. Thank you for that, Bruce.
You're welcome. You're welcome. Coaches, any other comments?
Yeah, just to piggyback on that, it's like I don't know why didn't I mention it before. When the liquidity is above, below like that, you really don't have a defined place to put your stop loss.
Yes.
There's prices all over the place. So
Yep.
again, like John said, hands off. There's no just because the elements, there's really no trade. So later on the trade will come. But as for me, I wouldn't take a trade because there's no target. The target, I mean, there's no destination, I should say. You don't know where price is going.
Yeah, and I try to follow the rule that you talked about. Trading is life, just put your stop just below, in the case of upward, just below a thick liquidity. And you're right. I mean, it's difficult to say where is the thick liquidity because it's all over the place.
Yeah, but you put it there, then you're moving right now. You're not trading. You're going off your emotions. You're back and forth.
No,
And
I'm talking about. I'm sorry. I'm talking about take profit, not stop loss. Take profit.
yeah. So now you're trading. You're going off your emotions.
Yeah.
And that's a trigger for the next trade, because the next trade you're still, your nerve is high. Trading's supposed to, I like to be calm when I trade. That's when I, make my best decisions. Stuff like that. When I see liquidity all over like that, and I see the elements, and it's tempted for me to get in, I just walk away for 5-10 minutes. Then I'll come back after the trade is over or the move has already passed. So this is coming from paying a lot of tuition. So
Yeah.
I just wanted to piggyback off what Bruce was saying off of that with the stop loss being moved, because there's no defined place.
Yeah.
Yeah.
Thank you for that.
Yeah, and I think moving that stop around like that, it underscores the fact that it's a bad market. It's a bad place to be trading in there. I think that expresses that. You don't know where to put the stop. So yes.
Yeah, that's the type of word that I mentioned. It looks like that's what they did now.
Yeah. Yeah. Okay. Good. Very good. Good session.
All right. All right, guys. Well, let's wrap it up, and let's see. I think DNT. I think it's your turn to take us out.
Oh man, I don't know what to say. I mean, everybody's doing such a great job, and Tommy and Vinfra have been posting their playbooks in the academy. And honestly, I think that's what the academy is about, and it's the process of taking these setups and the pilot program, all our processes that we're learning in the pilot program. It's transitioning them into and putting and making it real. You make it real by trying to create a playbook and sticking to something, and not just trading in thin air. And it's easy to do, but I'm going to keep encouraging everybody to keep posting their playbooks and the processes, and hopefully that helps us develop better in the live markets.
All
And
right.
thanks, Bruce. Welcome back.
Thank you. I like it. Thank you. Thank you, DNT. Thank you, everybody. Thank you, coaches. Thank you, Academy members. And let's we'll see you next Thursday.
Great session.
Bye-bye.